Welcome to the Mortgage Broker Podcast, tailor-made for Canadian mortgage industry professionals. Proudly presented by A Better Way Mortgage Group, this podcast is your trusted source for insider insights, market updates, and strategies to elevate your career in the ever-evolving world of mortgage brokering. Whether you're a seasoned broker with A Better Way Mortgage Group or an industry enthusiast looking to stay ahead, our episodes are designed to empower you with the knowledge and tools you need to excel in the Canadian mortgage space. We're back for another episode of the Mortgage Broker Podcast. Today I'm sitting with Derek and Jason, and we're going to jump into a very highly talked about topic here, lender access. We're going to talk about true lender access today. There's so many versions of lender access. Whenever you speak to a mortgage broker owner, it's actually pretty incredible how different it is from brokerage to brokerage. And Derek and I have spent a lot of time as a broker and being heavily recruited by other brokerages. And we learned not only through that recruitment process, but also changing brokerages and going to other brokerages over the years, just how different it really is. And we take a stance here at A Better Way that a very transparent process, and it's very clear what we have and what we don't have, and we make that very clear to our brokers when joining. And I would say one of our probably most complimented aspects of this brokerage is the fact that we have some of the best lender access, and I can attest to that since joining A Better Way Mortgage Group. It really is second to none. So we're going to jump into this. We are going to make a full episode of this, believe it or not. There's quite a bit to chat about. So we're going to start it off and just ultimately, like, what does it take to get, lender access? What does that actually mean? And Derek, maybe you can start it off.
There's a lot of different directions you could go with that question, but the biggest piece is volume, right? Like, you have to have, and when I say volume, obviously, funded mortgage volume. There are a ton of lenders in our space, which is great, keeps everyone competitive. There's a lot of different lenders with a lot of different products, a lot of different rates and different options, that's really what brokers need to be successful. To keep access, there's one thing in gaining access as a new brokerage. A lot of lenders want to try to work with you and they want to try to help get you set up and get you going. But a lot of these volumes are looked at on an annual basis, right? So even if you're getting set up in a newer shop and you get access to everyone for the first year, if you don't have the volume to keep that status going, those lenders quite literally will cut you off and you will not have access, going forward. So, being with a big brokerage has become such an important part of our industry. As we all saw, depending on where you are in Canada, the market's shifted drastically over the course of the last 2 years. And a lot of these brokerages volumes cut in half. For someone that was maybe just on the verge or just on the edge of having access to everybody, a lot of these shops have lost access to a lot of lenders. We're going to do a whole nother podcast episode on compensation because we can go down a rabbit hole on that piece as well. But you have to consider, a big brokerage, obviously talking about A Better Way, the volumes dropped roughly 35% industry-wide, ourselves included. And even with that, we were able to maintain top-tier status, access to every single lender that our brokers need. Volume is definitely the biggest piece that's going to maintain and grasp lender access. And there's a few other pieces we can touch on.
Yeah, I mean, not to sugarcoat that, I think a lot of folks in the industry probably felt pretty down on maybe the impact that they had last year being a bad year, and the good news is everyone had a bad year for the most part. Like, we've seen significant drop in volume across the board with every broker within our group and across the whole DLCG network and across the whole industry for that matter. So it just is what it is. Like, volume is down, but it does make it that much harder to keep it. And you made a good point. Like it does get taken away. Like, you don't, just because you hit these certain targets doesn't mean you keep it forever. And in fact, a lot of lenders are increasing these targets, so it's actually getting even harder to maintain. And for a large part, like, if you're just not with a super brokerage as an example, or doing significant volume and having a proper structure, which we'll get into, just ensuring that it's an organized structure with the proper pooling arrangements, it's just very, very difficult to maintain and keep. And we were a good example of that, funding $500 million in annual production. When we were brokering, we struggled to maintain lender access even at that, which was a very humbling experience. So, not to sugarcoat it, But kind of moving on, efficiency. Jason, maybe you can just touch on efficiency, because like a lot of lenders, as much as the volumes are concerned, efficient volume is even more important.
Even to a point where if you're with a brokerage that doesn't necessarily have the volume to satisfy all of the lender requirements, you might at certain times of the year have your favorite lender that you're dealing with as a broker, but the brokerage in general needs to pool more volume towards another lender just to keep their statuses going. And then now the broker owner, the principal, is kind of guiding you as to where you send your business just to make sure that they're not losing their access points. So sometimes it's not always just about having the access. It's about, is the brokerage telling you where to send your business so they can maintain their access levels? So I think those are all great points making. And of course, efficiency comes down to it. So it's not just the amount of volume that's running through these lenders. It's out of the amount of transactions that you're sending through, how many of those transactions are funding. So, app to fund or submission to fund or whatever kind of metric the lender looks at, it's very important that the brokers within the company know that this is the lender policy. We're not just spraying our deals out everywhere just to see who's going to get it approved. We have to make sure that the deals that we are submitting, we're placing it strategically at that right lender where they're going to be able to fund that application, because you can give as much volume as you want to a lender, but if your efficiency ratios are down, in the 50, 75, 60, 50% or less, that puts you at risk of getting cut off. Because these lenders, just like us, we don't want our clients to shop us and then go and take the deal somewhere else to another broker. The lenders are doing the same thing. They don't want to put their time and their effort and their resources towards underwriting applications only to have them being pulled and going somewhere else. So efficiency, really, I think it's just as important as the amount of volume that's rolling through. Having those deals fund and making sure that we're not tying up our partners' resources from time perspectives, only to have that deal not fund or for them to go and hedge their cost and then for us to pull it away. That's of course a negative for the lenders, and we have to make sure that we're hitting all of our targets. And primarily the biggest thing that we need to learn is why are we sending our applications to specific lenders, and where are we going to send it, the particular application, to have the best chance of funding it with that lender. So efficiency definitely plays a massive role in this.
Yeah, bang on. Another kind of angle of this whole efficiency conversation is, if you put yourself in a lender's shoes, and this is why a lot of the reason why they will work with a big super brokerage, is the efficiency in just working with, maybe 5 or 10 different big groups instead of working with 250 small brokerages, right? You're not dealing with 250 different owners and systems and processes and people. And, there's a really prominent credit union locally here in BC, and like they only had about 15 different groups that they worked with, and luckily we're one of them. But just to give you an example, like that creates a lot of efficiencies from the lender side as well, as not having to work and constantly sign up and change and add from all these smaller shops. So from a lender's perspective, it brings a lot of efficiency to their side if they're working with a big group that, like Jason said, is sending an efficient business.
I just want to touch on like the networks. There's some large networks within this industry, as you all know, and just because you join the network also doesn't mean you just get access because you're part of the network. Like it really does come down to the the silo of the actual brokerage. And back to the term that was just tossed around here, super brokerage. It's important because that is ultimately where it comes. It's not the network that builds or gives you that lender access. So it's super important to just understand that that distinct difference, because we see a lot of people, especially from the banks, very high producing mortgage specialists from the banks, come over to, let's say, a network as an example, start a franchise, start their own team, and they're starting from square one, and it's beyond difficult. I couldn't imagine having to do all the things you have to do to get lender access in the early days when you're making that move, opposed to just staying focused and staying on track with just learning the mortgage broker space, and having to add the addition of adding all this lender access stuff on top of that could be very, very challenging. So I just want to make that distinct difference. And just the one thing that networks do provide from a lender access perspective, which I'll contradict myself here in a bit, is there are lenders that are specific to certain networks. We just went through an example of this within the DLCG. We're having HSBC, where they were only available to DLCG franchise. So Mortgage Architects, Dominion Lending Centers, Mortgage Center Canada were the only networks within the DLCG that had access. But even though the network gave us that access, we still had to build our lender access with that specific lender. The network just opened the door for us. So maybe you can touch on that.
Yeah, it's a great point. I mean, HSBC opened up a lot of doors for our brokers. We did a ton of business with them. It's too bad that they had to leave due to the RBC acquisition. But I mean, back to your point, it's not even contradicting. Like DLCG brought HSBC into the channel as a partner. Not every single DLCG franchise had direct access to HSBC. Like some of them actually didn't. They had to go through a submission desk, and it's a different process. So, yeah, great point. And I'm sure we'll continue to see more of that. Again, back to my point of a lender choosing to be efficient, like just going to a DLCG as an example, everyone's submitting on the same platform, right? Same system. They're working with the same people. They're talking to the same executives. It just, everything becomes a lot more streamlined, which I'm sure we can all, kind of understand and appreciate. But I think the only other thing I'd add here to, what does it take to get it is, I mean, you got to go for it, right? And you got to communicate with these lenders. You got to understand the relationship piece. You think of a broker that nurtures a relationship with a client or a realtor, like that's the same thing for us, right? Like we put a lot of time and attention into building relationships, maintaining relationships with our lender partners, making sure that things are going as smooth as possible for them. Every lender is a little bit different, right? Some of them are not looking for $100 million a year. Some of them are looking for 10. Some of them are not looking to work with every single one of our brokers, and they're more specific. So, that's something that we have to kind of look from the top down and try to support our brokers and our lenders and pair the right people with the right, contacts. And I think that's just a big part of all this is the relationship piece, right? Is you communicate, you understand your targets. Like Dean mentioned, there's targets that you have to hit every year. If we're not on pace for that target, like you can believe me that we're going to be talking to our brokers and we're going to be doing everything we can to maintain and make sure that we fulfill our commitments with our lender partners.
Yeah, I think, just to wrap this topic up here in regards to like, what does it take to get lender access? Communication is going to be a common theme throughout this entire podcast with lenders. And if you're not hitting those targets or you had a bad year, communicating it and readjusting the target and ultimately, having that relationship where you can communicate with your lender, let them know, hey, I'm not going to hit this target. This is probably where I'm going to be. And then ensure that you keep your commitment to hitting where you're going to be. Is very important. And you'll notice that a lot of lenders will work with you and massage the targets as you go through a year or two, especially when it's down. And, a perfect example of that is Scotiabank. Largely, they're our biggest lender at our brokerage. They're our number one lender, even in a bad year. Last year, not only was it a tough year from a market perspective, but it was a tough year to work with Scotia because they were priced out of the market pretty much all year, even though they still were our number one lender last year. And their targets are quite substantial. I mean, it's a $50 million target per year to have a BRM team. And, we have many of those teams. So we have a lot bigger target than just 50 million. And luckily, because they're such a good partner and we have very good communication with them and they have very, very good communication with the broker channel, we were able to get grandfathered, and as everyone was in the industry, to the following year because they recognized that they were out of the market last year and that they did some things to ultimately make it a little bit tougher to hit those volume targets. So again, back to communication, and that segues well into just ultimately what is our role in keeping lender access. And that's one example just there in regards to Scotia. But yeah, maybe we can kind of carry forward here. And yeah, Derek, why don't you take it away? Like education as an example.
Yeah, I mean, trainings and support I think is huge, right? Like we do weekly lender calls. We have 50 online lender calls a year in addition to other events, but making sure that our brokers have as much knowledge as possible to understand the lenders, to understand the products, to understand why to go to TD and why to go to Scotia and why to go to Coast Capital. So, we do as much as we can to make sure that our brokers are armed with the resources that they need. And to be honest with you, if you're a broker and you're lacking product and lender knowledge, I mean, that's what this business is all about, right? Like you're a broker because you have multiple options to present. If you don't understand all of your options, that's an issue in my opinion. So, again, trying to support our lenders and making sure that we get them in front of our brokers as much as we possibly can. Like every single lender that our brokers are actively working with, I would say that comfortably that they get in front of our brokers at least 4 to 5 times a year. And some of those are specific to that one lender, talking about their products, their niches, their programs, and efficiencies on their side.
I think the unsung heroes of this industry could very well be the underwriters of the specific lenders, as well as the business development managers that represent our lenders. I think the business development managers are underused by brokers in many scenarios. I think a lot of the time, for whatever reason, depending on what stage of your career that you're in, brokers in some regards are a little bit nervous to potentially call a BDM, business development manager, to run a deal by them. But we have the best BDMs that are attached to the Betterway group. And primarily, I think that is due to the size and the scale that we have. But our BDMs do such a great job at talking to our brokers about their deals. And even if it's just a deal run that says, hey, I've got this application, I want to send it to FirstNat, and we call the local BDM just to run that application by them before just firing it off. I think that they're a massive resource to us, and really what we have to do as brokerages and as an industry in general, to Derek's point, is we have to get our lending partners in front of our brokers more and more and more, and having them continually educate us on how to use them, what to look for. I mean, there's a lot of times that we don't even think of, we just think of a lender as, hey, I'm going to send my deal here. But there's a lot of lenders that have niche products and niche programs where you could actually build a business model around. And leveraging the BDMs to kind of talk through that and how can we actually make them a part of our business plan. I think that's kind of a missed strategy that a lot of brokers are kind of overlooking. And I mean, really, I do believe that we have some of the best BDMs in the market, and they're very, very good at showing us how to use them, why to use them, and when to use them, which overall helps with the volumes and the efficiencies and everything that we mentioned.
I'll play the opposite side of this for a second. Like the lenders do need to make an effort here as well when it comes to ensuring that they have, they have the volume coming to them. And to your point, like, yeah, there's some really good underwriters and BDMs out there, but they have to make the effort to make sure they're in front of our team. And, we do everything we can to ensure that they get in front of our team with, the lender calls that Derek mentioned, the events that we do. But they also have to pick up the phone, just like a broker picks up the phone to get realtors and clients. They have to, the BDMs have to step up and make those phone calls too. And there is so many options out there. There's so many lenders that you can work with. And the reality is you probably don't need all of them. But you never know when you're going to need that one niche policy or that niche product that lender A has that lender B doesn't, and if you don't, sometimes you might not even know about that because it wasn't made aware to you. And so again, back to like we're doing everything we can to support our BDMs to ensure that our brokers have all the resources, have all the education. But we definitely hold our lenders accountable to ensure that they're doing all the right activities that they need to do. And we have these conversations where corporate managers or what have you, people that in higher positions than BDMs come to us, or BDMs and themselves come to us and say, hey, like, what's going on? Volumes drop, so on and so forth. It's like, well, our first question is like, well, what are you doing? Like, what are you doing to get in front of our brokers? We're giving you the platform to do so. Like, what are you taking advantage of that? And if the answer is no, we definitely hold them accountable.
Oh, it's an excellent point. I mean, you can look at, where the volume of the Betterway group goes, and it really does kind of go to the directions of the most active and engaged BDMs and lenders. And this just like anything. I've been a BDM in the past, and typically it's if you're top of mind and you're reaching out, you're going to get the business. And, we can see that in the reports, and I can name a few lenders that are very, very engaged with our brokerage. And sure enough, every quarter when we look at our reports, they're getting a lion's share of the business. And that's because when they come in and they show that they can support the broker and help them through and help them construct and build applications, and perhaps show them how to build business out of the programs and products that they have, that's the mark of a good business development manager. And I think that's where you start to see a lot of the lifts from these lenders, is just the support that they're giving in the business.
And to wrap that up, like, we've had situations where we've had excellent underwriters at certain banks, and even just that sole position of having such a fantastic underwriter is a big reason why the volumes go in there, because brokers feel comfortable working with them. They have a good rapport. The underwriter is efficient and gets things done quickly, like that alone could win and retain business from a lender perspective with a broker. But the opposite happens as well. You know, you get one bad underwriter in there and the volume just dies. So again, it's not always just the broker or the brokerage's role, but somebody has to keep everyone accountable. So it's all good points. And I mean, unless we have anything to add on ultimately, what does it take to what is our role as a brokerage to keeping that? Maybe we can just roll into like what are the agents' roles in keeping lender access?
Yeah, just two quick things on our roles that we didn't really touch on in detail here, but direction from our side too. You know, like luckily we've been in the industry for a long time. We've done thousands and thousands of mortgages, so we actually do have a feel and a gauge on, you know, what lenders are doing what, and we're happy to support and give direction so that our brokers have an understanding. And you know what, if our brokers are using 5 lenders substantially more than others, they're probably doing something right. And we have no problem talking about that, right? Like we're always going to give every single lender in our channel equal support. But if there's something that's being offered by one lender that's not offered anywhere else, 100% we're going to support our broker and make sure they have an understanding of that. And then last piece is just, you know, we like to think that it's going to be a perfect day every single day, but sometimes things do go wrong. And, you know, maybe you have a broker that's causing a bit of a stink on a file or something's gone sideways. And I think this is just one piece that a brokerage owner has to take into account. Like we have to support our lender when something goes wrong, right? If we have a broker that's being disrespectful for a lender, like not into that. And we will deal with that right away. You know, if something's been submitted to a lender that has inaccurate information and it has to come to us, like we're calling that broker immediately and we're having figuring out what happened and why it happened. And again, just supporting the lenders on the good days, but also the bad days, because, you know, it is a big brokerage and there's a lot of people and a lot of different personalities and not everything's going to be perfect. And we take the relationship part of this so seriously. You know, we're always there to support.
Well said. So let's roll into what does it take from an agent's perspective? What is their role in keeping lender access?
Yeah, we can probably rattle through this pretty quick because we've touched on a lot of this already, but you know, obviously supporting multiple lenders, I think that's key in being a broker. You shouldn't be sending all of your business to one lender, even if it is easy and efficient. I think you know there's different buckets for different files and different people. So understanding what different lenders are offering so that you can support different lenders is huge. The efficiency piece that Jason touched on is probably at the top of the list, to be honest with you. Like you shouldn't be submitting an application if you don't know that it's going to get approved or you're not pretty confident, you haven't had a conversation with the BDM yet, and you shouldn't be submitting an application to a lender if the client doesn't know, because the lender is going to go and approve that application, then you're going to go try to sell it. Oftentimes that isn't going to work out. So efficiency is definitely up there. Communication, again, like Dean mentioned, this is you know kind of a common theme in this podcast, but communicate. Right. You know, we had a lender that we were chatting with the other day and there was an approval and like the broker just never got back. This wasn't one of our brokers, but the broker just never got back to the lender ever after they issued an approval. Like they just never even responded, which is mind blowing, right? Like you might be embarrassed to tell the lender, sorry, you know, the guy went somewhere else, or I had to take the deal somewhere else for this rationale, but just communicate, be transparent, tell the lenders what's going on. You know, lenders are pretty upfront about this. Like if there's an issue in the file, don't try to hide it. Just tell us and we'll tell you if we can work through it. Right. So yeah, and I think the last piece is just using a BDM for deal runs. Back to the efficiency piece, like you got to call your lenders if it's not a sure thing that it's going to get approved, you got to run the deal by your BDM, or if you have a good relationship with the underwriter, go through the specifics, tell them the hair on the file, and you know if they tell you to send it in, fair, right? But I think you got to do deal runs. It's key, and it can be as easy as prepping a bit of an email with a summary of the file, right? 8 bullets, what's the good, what's the bad, and flip it out to 10 different lenders if you need to. Right, just to get a gauge on where it should fit.
Yeah, and lenders love feedback, even if it's negative, because it helps them be better. It helps them, you know, find solutions to potentially create opportunity. And you know, if you are working challenging files or you're just finding, you know, it's a struggle to get deals approved, and you are having to go to, you know, maybe more than one lender to get files approved, keep notes on that. Keep diligent notes on like what's, you know, the why and in the struggle, and share that. You know, make the time to sit down with your lender partners, your brokerage owner. For us, like we would love that feedback as broker owners to hear like, you know, what are the challenges, because that is something we would go back to the lenders on and say, hey, here, this is a common theme here, right? Like how can we fix this? And you'd be surprised. They're pretty willing to change and make, you know, make revisions to ensure that the service and everything that you expect it to be, or create products for maybe an opportunity that they don't that they're not servicing the market for. We can kind of touch on a few things that we've seen over the years in our careers, just that we've experienced through this topic, especially when it comes to lender access. It's a very vague term, I would say, in this industry, lender access, and I think it'd be good to. This is probably going to be the best part of the episode, in my opinion, is just ultimately like, what have we seen, and can start right away with having to force a submission through another agent. So what I mean by that is that, hey, yeah, we have Prospera Credit Union or HSBC or what have you, some unique lender, and that's sold to you as up front when you're looking to choose the brokerage you want to join, and then realizing that, oh wait, like once you're there, you actually have to co-broker it to another agent. Yeah, Derek, you can speak probably directly how challenging that is.
Yeah, we were with a brokerage at one point, and again, we were sold that we had access to everyone. Yeah, technically we did, but we quickly realized that we had to go through a certain agent, transfer the file to them. They had to submit it. They had to send the docs in. So it was just this clunky process. And honestly, while we were with that brokerage, we got to a point where we just pretended that we didn't have those lenders because it was so clunky. It was so slow. You're relying on someone else, for updates. It's just, we've always ran a really clean, quick, efficient process, and that totally changed the game for us. So unfortunately, we joined a brokerage where we were promised access, but the access point just simply wasn't a feasible or viable option. So we ended up not using them. So really unfortunate when those situations are not disclosed at the beginning.
Yeah, and there's nothing worse than feeling like you've lost control as a broker when it comes to like actually dealing directly with the lender. Like in those cases, like we couldn't even actually speak to the lender. This individual that was the submission agent for one of the particular lenders used to take naps at 2 p.m. Like no joke. Like we couldn't actually get a hold of the individual to submit urgent files. Like and for those reasons, of course, we're like, yeah, we don't have access to the lender because it was just so chaotic and ruined our client experience, ruined our working experience as brokers, and our employees, couldn't handle it, and it just. I think the key word I mentioned is just control. Like you do not want to lose control in any regard. We're already middleman when it comes to the client and the lender. Like to add another middleman into that situation it's chaotic. There's no way to sugarcoat that.
Yeah. The next piece would be forced submission through a desk within a brokerage. So like a lot of brokerages will have an underwriting desk essentially where, you can use it for underwriting support, but there are some brokerage that like, if you want access to this lender or this lender or this lender, you actually have to do it through that person. And 99% of the time you are paying that person and or the brokerage to do that. So, is that true lender access? I would suggest not. True lender access would be that you as the broker have direct access, like you can go into your Velocity, your Filogix, and you can submit the application directly to the lender without involving anyone else. Don't get me wrong, there's pooling involved in a lot of this. That's how we are able to, gain and keep access to all these lenders. There's pooling, but you're not going through someone else just to get access. So that's something that's actually quite common in a smaller brokerage because they need specific volumes on certain teams to keep the status. So anyways, if you're making 1% commission on a file, but you're forced to submit through a desk and they're charging you 25%, well, you're actually making 75%, which again, that's disclosed up front. You're comfortable, fine, but it's not true access.
So that would be the same thing, like similar to like a submission through an access desk at a network, which we've seen regularly, where like there's there's the brokerage that has the underwriting desk, but then there's also might be the network like DLC or M3 or what have you may have like a submission access desk throughout the network as well, which is a complementary to the brokerage. But similar sort of thing, you're paying a deal fee of anywhere from $400 to $500 to do that. And again, you're losing control. It's a different process. It's a different, contact point, everything. So one thing I just wanted to touch on, which is really key to understand, and I think for a lot of folks might be, listening to this and writing down questions like what to ask a brokerage owner when being recruited or when considering making a move to that brokerage. And we're talking about maybe a specific submission agent and or an access desk or what have you. So asking detailed questions to kind of get to the fine details of that answer are important, because it might be confusing, but like at our brokerage, as an example, we have one submission agent for our Mortgage Architects franchise. We have one submission agent for our DLC franchise, but that doesn't mean you have to deal with them or talk to them or go through them. It's just they're noted as a submission agent, you're noted as the agent on the deal, and everything goes through you still. But for the pooling perspective and ensuring that we have top compensation, top turnaround times, top underwriters, all the things that we push, there is a submission agent to track the pooled volume. So like that could throw somebody off and think, oh shoot, well, you have a submission agent. Like, I don't want that based on what you're saying. But again, there is two key points to point out there. Maybe Jason, you could touch on that.
I think Derek made the comment that I think if we simplify this, I mean, as we kind of go through this, I mean, there's a lot to unpack with lenders and access and compensation and all of that. But the one word that I would consider if I were a broker looking to join a brokerage is, do I have direct lender access? Direct lender access is, of course, you being on the application, you being the agent, you're the one dealing with the underwriters, and you're kind of taking that application from front to back. I've done a lot of recruitment over the years, and it's amazing how many brokers I speak with that say, you know what, Jay, I have access to everybody. And that all sounds great, but when you really break it down, you might have access, but you might have to go through various different ways. So if I were looking at joining a brokerage, if I were a broker, I'm thinking about what direct access do I have and how can I make sure that I, as the broker, am controlling the application from start to finish. Not only can I access these lenders directly, but I can access them at their best programs, at their best comp tiers, at their best rates, all of that. So I think it's a very overstated topic where brokerages are saying they have direct access and you can go through everybody, but it's not really drilled down as to the how and how do you get that deal out to every single lender. So anytime I'm looking to speak to a brokerage, I'm asking the principal or the broker owner, do I have direct access? Yes or no? And then I want them to show me the direct access points and what that actually means for the program that I'm using. So I think as the broker, this is our business and we have to dive deeper on this and make sure that we do have all of these points where we're controlling this application from front to back. And there's no lender out there that we cannot send that application to directly. So direct access is something that I would be asking a lot of questions about.
I think honestly, like as we're talking about this, there's just such a lack of education on this piece in our whole industry. Like no one really knows. And if, as a new broker, you join a brokerage, you stay there forever. Like how would you know that what you have is not proper, right? Or it's not ideal, or it's costing you more than it should. So I think, yeah, the unknowns, it's always there, especially for people that are currently with the brokerage. But for someone looking to join a new brokerage, like these, you got to ask these questions. You got to understand the compensation that you're getting, access points. And just on this topic of, what have we seen in our careers that were a little bit different than what we have here at A Better Way. Interestingly enough, I mean, if you're a high producing broker, like we were recruited constantly and people would say like, once you come over, we'll get top comp with Scotia. Like once you come over, we'll get this. Once you come over, we'll get that. Like to me, that's a red flag, to be honest, not to knock that person. Like, everyone's trying to grow and try to make sense of it. But that was always a bit of a turning point for us. Like, I feel like if you're joining someone, they need to have everything set up now. Like, what are you joining now? What's the guarantee now? Right. I think that's a big piece. And just tying into all this, like, you're going over there for access and you might not have it. What's also tied into that is the compensation, right? People can say that they're getting top comp at this lender or that lender, but like, what is top comp? What does that actually mean, right? And again, like there's a major lack of education on this piece in our industry. And you join a brokerage, they tell you you're getting 110 bips, that's top. Fair. Like, how are you going to know there's any different, right? So I think just like really having an understanding what's out there and asking the hard questions and, get people to put this in writing for you if you're looking at making a switch. It's a massive undertaking for a brokerage to change brokerages. Like it's got to be worth it. And you got to have an understanding of costs.
Again, that's why we're going to touch on compensation as a whole separate episode, because there's a lot of pieces here. Scorecards, efficiencies, volume bonuses, all these sorts of things that we're going to touch on in a separate episode. But I just don't want to gloss over this piece just around what Derek mentioned around, we'll get access if you join us, or we'll get this if you join us. Like the reliance on you to be a part of that solution is the ultimate red flag. If it sounds too good to be true, it probably is. I can't overstate that enough. Like if they have to rely on you to get those access points or volume, like we're significantly behind, because is the minute that you decide to make a change in your business or what have you, and then now it's on you to get those those items that you were promised. Like that's a big red flag. So I can't overstate that enough. So moving forward, what do lenders care about? And this is where we'll wrap up. Jason, why don't you take this away?
Yeah, I mean, I think the lenders, obviously, they care about, they want to know who they're working with. They want to know that they're working with, like-minded people. I think the key word that we can use in this business in all areas, not just talking about lenders and referral partners and all that, but it's a relationship. What sort of relationship do you have with your lenders, and what sort of relationship does a lender have with you? Circling back to my comments earlier on the business development managers, I think if I were a broker, I'm wanting to introduce myself to all the business development managers, tell him or her who I am, what sort of business I'm looking for, how can I support them, and how can they support me. So I think the relationship aspect of it is definitely key. Derek, I think he touched on the respect. I mean, we have a zero tolerance, of course, for any negative behaviors towards our lending partners. I mean, this is a high pressure volume job in a lot of cases, but we always have to maintain our professionalism and make sure that we're treating everyone with respect, just as we'd expect that back to us. So I think obviously relationships, respect, efficiencies, as we've talked about, we're not just spraying in a bunch of applications that are never funding. We just don't want to tie up people's resources and have them waste time. And, I mean, the lenders, obviously, they want to have support from the broker owners. And, I think there's a lot of brokerages that do a great job of it, but really what it breaks down to me is how engaged are you as the broker owner with the lenders, and how are we getting our brokers involved with those lenders? The more that we can get people connected and understanding and building that personal relationship, the better for all parties. And really what that breaks down to me is communication. And, not as one of you guys mentioned, not every day is going to be a great day, but, are we talking through everything that's happening, and we staying kind of above board? And, I think at the end of the day, we've got to understand, and which I think primarily we do for the most part, is everybody is here to help everyone else, and we all want to see good, clean, solid, efficient business. And really, it goes a long way when you have that really good partnership with the lenders out there.
I can't understate the respect enough, respect to staff. Like that is so important. Like if you're going to treat people poorly or speak down to them or scream and yell at them, which we've seen, like you will be cut off. And we have we have zero tolerance for that. Like absolutely. Like it's a hard stop.
One thing's for sure, and lenders are very vocal about this. Like you could be the highest producing broker in your brokerage doing $100 million a year, but if you're rude to your lender partners and their staff, like your deals are going at the bottom of the list. They're going to pick up that brand new agent's file that's a super nice guy or gal and called in, to check in and run the file by them. Like your files are getting pushed to the side. So again, these relationships are so important. And again, there's a lot of lenders that we have access to and that we work with, but most brokers are probably going to do the bulk of their business through 5. Like you ruin that relationship with one of those 5, they're never going to change, right? Like there's not a constant kind of funnel of new lenders joining the industry. So you got to preserve this. And, you're going to spend 8-9 hours a day working on this, talking to these people. Like, why not try to enjoy it? Right? Like have good conversations, talk to people about their lives and what's going on, get to know people. We've gotten to know so many cool people in this industry. It's unbelievable actually. And yeah.
Let's not forget that everybody talks, right?
Yeah, I was just going to say.
If you're an ass to one lender, you're going to be an ass to the next, and that's going to get out, and that's certainly not a brand that you could build a long-term sustainable business around. So they're all friends, and we know our BDM group out here, and they always communicate. There's an actual BDM lender group out here, the BC Lenders Association, I believe it's called, where they all communicate. So be respectful, be kind, and these people will help you build a business.
It is a very small industry from that side of things. Like most of these BDMs are all very good friends. A lot of these underwriters speak to each other regularly. Aside from just an association, like it's just a small industry, and people really do talk. think about all the events you go to. All the lenders are always there. Like everyone's always there mingling. And what do they like to do? They talk drama, just like anything else in high school, right? And they talk about that one ass that was yelling and screaming at them, and like it's just that quick that you got that reputation. So at that side of things, like it doesn't matter what super brokerage you're with, what network you're with, who you are, like you will be treated differently when you're like that. So obviously, just to kind of wrap up what lenders care about, we talked about efficiency throughout. They're very much concerned with the efficiency of their business. They don't want to work on deals that aren't going to fund, and having support from owners, ensuring that. I think this is a big one. Like if your broker owner is potentially, focused on brokering themselves, that could be a distraction where maybe they don't have the time and resources to ensure that their lenders have support from things like events, training calls, training sessions in general, making sure that there's a platform for lenders to get in front of them. So that's a big piece. And then just back to communication. Again, the common theme here. What do we care about? Derek, why don't you wrap it up here?
I mean, relationships, again, super important for our side of things. Service for our brokers is huge, right? We put a lot of time, energy, effort into trying to make sure that our brokers are respectful, everything that Jason and Dean just listed off, running an efficient business. So we expect the same. We expect efficient service. We expect good communication, clean communication. We expect updates. And, if that's not happening, we're going to be the first to stand up and push for it. Products and pricing, again, this business is we're in the sales business, right? So products need to be there, pricing needs to be there. We constantly have promotions coming through where our brokers are getting paid some extra compensation, or we have lenders coming to us and they want to roll out a new product through us specifically, because again, back to the efficiency piece, you can't roll out a new product to every single brokerage in the country. You get flooded. So things like that, and we like being involved in those kind of day one and having some control on that. And just last piece, feedback and transparency, right? Tell us if something's not working. Tell us if something is working. Our lenders they're very open with us, which allows us to do a good job and keep a lens on our brokers and our brokerage, which is, is helpful for everyone involved. And I guess just tailing off, we've had this year alone, we've had about 4 or 5 different lenders reach out to us, and they want to host educational events for our brokers, right? Like not even specific to mortgages all the time. They're not trying to sell their products. They're just trying to do something nice and kind for us so that our brokers will benefit, mentally, or their business will improve, efficiency, whatever it might be. But it's nice to see that lenders are taking a different approach than just trying to jump on a call and talk about their products, right? Like they're trying to get to know people. They're trying to bring real value to us and our brokers, which it goes so far, and we appreciate it.
Yeah, I couldn't agree more. I think one of the big pieces that I've really appreciated from like a perspective of change is just lenders trying to show value. What to your point, like events. We have one lender that's focused on a training event that's specific to sales and tactics that are going to be important to helping them be better at sales and ultimately do more business, and taking that approach and just, it might not have anything to do with the actual lender's policy or product, but the brokers and the brokerage, we're going to definitely remember that and remember who helped us with adding those skills. And everyone's trying to be better. Everyone's trying to find a little bit of an edge right now. So that's obviously something we certainly care about. So just to kind of wrap up, we touched on, again, the true lender access. What does it take to get it? What is our role in keeping it? What are our agents' roles in ensuring that we're keeping our access? What have we seen in our careers, which was, towards the middle of the episode, we really kind of went deep here, and, ultimately what our lenders care about and what we care about as owners. So we'll wrap up there. It's been a great episode. Again, there's a lot more to chat on this topic when it comes to compensation, and we'll certainly be touching on that very, very soon. And with that, if you have any questions or any feedback for us, it really does mean a lot. We want to hear it. It's helping us tailor our future content here. And again, this is stuff that's coming up regularly. Lender access is by far one of the most asked about items in our business. So appreciate your feedback, and On to the next one. Thank you for tuning in. If you found value in this show, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, and YouTube. Your support is incredibly appreciated. We also welcome your reviews and feedback, which are crucial in helping us deliver outstanding educational content. Feel free to share your thoughts. A 5-star review would be fantastic if you think we earned it. Lastly, a vital announcement about Backpack Buddies, our chosen charity for 2024. This remarkable organization addresses a hidden hunger issue many are unaware of. In British Columbia, while school districts provide meals during school hours, numerous children face food scarcity at home, particularly during weekends. Backpack Buddies steps in to support these vulnerable children, ensuring they have easy to prepare, familiar food for weekends. This is achieved through collaborations with schools and an extensive distribution network. Your contribution can make a significant difference. With just $20, you can give a child in need a food bag from Backpack Buddies filled with enough meals and snacks to sustain them over the weekend and more. Once again, thank you for listening and see you on the next one. We're here in the warehouse today. There's over 25 of us packing. The goal is to pack as much food as we can for the kids in the next 2 hours.
We are stuffing bags to help feed kids that don't go home with meals on the weekend.
I'm actually unpacking and getting the food ready for the boxes while we have a crew packing individual bags.
Hello, we are here at the Backpack Buddies. It's a great cause. We are super happy to partnership with the Equitable Bank.
Feels pretty awesome. It reminds myself, and I'm sure everybody else, how thankful I am that I have meals to put on my table.
Phenomenal cause. Our partners Equitable Bank are supporting. A lot of our brokers are in-house as well.
At the end, we have Jason packing them into bags of 5.
Super happy to be a part of Backpack Buddies. Awesome charity that the Better Way Mortgage Group is supporting. Super happy to be here, and yeah, let's get a lot of food out. We just learned a great stat that this actually feeds 6,000 kids a week all throughout BC. Amazing cause and a great day here.